guys, hi everyone. Can you guys hear me clearly? Hello. Okay. Thank you for your responding. All right, guys. I think the webinar in December, okay, could be free and easy because it's almost end of the year, and I already start to plan out for the January webinars. If you have any like specific topic or strategies, okay, you want to learn in January or 2026, you can send to me. Okay, I will put that in my schedule. All right, guys. Okay, nice to see you. Thanks for joining me. Shall we just wait for 1 more minute? I will start the session. You can share with me as well how is your 2025 so far? How how is your trading? Is it better? Is it getting better? Any improvement or anything you want to change or you want to bring in 2026? You can share with me as well. Okay. Let me. So how many of you join? Hi. Okay. Anyone join me in Zoom? Any one of you guys the first time joining the webinars? Is it Tiffany? Hi, Tiffany. Is it your first time joining my webinars? Hi, Matthew. Hi, Kirsten, Tiffany in Zoom, and the rest of you guys in the Vantage app. Okay. Should we just begin our session? I don't want to keep you guys waiting. So again, good morning, good afternoon, good evening, wherever you are. Welcome to Vantage Webinars. As you can see on the screen, today we will talk about Forex risk and money management. Okay, this is very, very important if you want to be the successful trader or you want to be a better trader in 2026. Okay. And before I start the webinar, guys, disclaimer first. Okay. Okay. I'm looking at my phone because someone just sent the like a messages in the Vantage app. I just want to read, but I think they're just a scammer. The scam. So we don't bother about that. Okay, so disclaimer, guys. Everything in this video is purely educational in nature. Nothing in this video should be considered as an investment recommendation or any kind of advices for you guys to buy or to sell. So if you want to follow my like the trade setup, just be cautious because I could be wrong. Okay, my win rate not 100%. Okay, sometimes my setup can hit the stop loss as well, and I treat the stop loss as my friends. Okay, so stop loss can help you to protect your capital as well. And risk warning, guys, over here they say that trading forex and safety carries significant risk, and it is not suitable for all investors. So you could lose substantially more than your initial investment. All right, so if anyone of you got news to our Vantage webinar, okay, Vantage offer a free webinars, okay, 3 days per week. Mondays is about live transaction, Tuesday and Wednesdays is about education. West Tuesday is covered by Crescenda, so actually she will bring you guys to like those like fundamental, okay, and then Tuesday about like technical, so you can just whenever you're free, just come and join webinar. It's free, okay. Okay, so about myself, my name is Peggy. I'm an investment analyst and a prop trader. I have been trading more than 5 years now. So currently I'm trade for my own account. I trade for the prop firm account, and this year I kind of like trade futures as well. Okay. This is the agenda for the guys. So we're gonna cover why most traders lose even with good strategies. Okay. Fixed percentage or ATR based or hybrid position sizing, risk reward versus win rate, finding your break even edge how to keep drawdown and protect your capital. And like example, okay, so what they say that, yeah, you can see here, they say why more traders lose money. They would say that 90%, okay, based on the statistic, right? They say that 90% of the retail trader lose money in the long run. We consider ourselves as a retail trader, okay? The common mistake, you will see that risking too much per trade, which is this is over trading, or you can put like over lot size. No position sizing rules, ignoring drawdown limit. Okay. Over leveraging position. Okay, when I will just share with you guys, when I was news, okay, I just got into the forex market like 5 years ago or more than that. Okay, I did over leveraging. Okay, there's one broker. Okay, they offer unlimited leverage. Okay, the first one that I go for, which is 1 to 1,000, I go for 1 to 2,000, and I go for unlimited leverage. Like a broker that offer, but I think not many brokers do that. I go for that. Okay. And I trade during news as well. So like is this like any one of you guys when you watch news to the market, it seems like the market just give you the money, right? You kind of like easy for you to get the money. Like when I news, I easy for me to get 3,000, 5,000, or like almost 10K when I was news. Okay, which is I have zero knowledge. Okay, then at the long run, I will lose my profit. I also lose my capital because I don't even know how to calculate risk per trade. Okay, I don't know how to calculate risk per trade. Okay, I over trade. Okay, meaning that whenever price come, for example, I buy here, right, and price falling, I just keep really entering in zone, like leveling somewhere here, and the price is falling, I just label buy, and up, price just falling, boom, and then it's not even hit stop loss because I don't have stop loss at that time, so meaning that I burned my account. Okay, so that when I was news. Okay, and the truth is they will say that strategy is only 30% of the success. Risk management is about 70%. Consistency beats big wins. Survival come first. Okay. To me, total up here, even though they say that, okay, strategies, I agree with them, it's about 30%. Risk management, 70%, you add up is 100%, right? But total up here is all about your mindset. Okay, it's all about your mindset. It's just go back to your mindset. How you're gonna handle, how you're gonna think, how you're gonna react, what you're gonna do after it hits stop loss or after you have the big win. Okay, whether you specify the profit or you think you want more, everything just go back to trading psychologies. Or then, so what I want to say is that in year 2026, if you already have a good strategies, but you cannot be, or you cannot be profitable trader, yes. The thing is just go back and study trading psychology. Okay, why I say that? Because last time I was one of them. Okay, I know many strategy, I have my setup there really nicely, but there's a problem within myself, within my mindset, which is one, I have a FOMO, I cannot wait, even though I know that my setup is there, but I feel like I cannot wait. Okay, so I need to kind of sit back, talk to myself, work with my inner, and then go and study training psychology, do a self-talk, this and that, right? And then I can say that right now I'm consider myself a profitable trader, okay? And I don't go for big win, okay? I go for small win, but with consistency. Okay, so in year 2026, you should just aim for small win with consistency. Okay, no need to go like, okay, one trade you earn like 3,000, 5,000, or 6,000 like today. You just go for maybe depending on your account. Okay, if your account is 10K or 40K, okay, you can aim for like 1K and 2K, I think that is possible. But if your account is 5K or 1K or 2K, $500 per day, that is achievable. Okay, I tell you that is achievable. You just imagine you just have small win, okay, 500 per day, right? You time 20 days, that already 10K per month. That's your additional income if you are working full time, right? This is additional income for you. To me, additional 10K, that is good enough for me already. Okay, I don't need more. But sometimes, of course, per day, sometimes I earn more than 5K, or sometimes I just earn $300. If market is not in my favor, I just close it. $200, $100, or $300 per day, or even 1K are enough. Okay, so just ask yourself, what do you want? First, what do you want from the Forex? If you always think that I want to be a millionaire, that is okay. Okay, or you think that you want more. No, right? Sometimes you might have to give back to the market, because sometimes I hit stop loss and I will think that okay, market already give me the money, give me a lot of profit. Sometimes I have to give back. Okay, but after you give back, it's also about your risk management. Okay, you cannot just give them back or with your profit, your capital, right? That's why come back to your stop loss. Okay, just treat stop loss is like your friend. Okay, position sizing method. So you can go for one fixed percentage method, position sizing. So how you gonna calculate that? You're using your account balance multiply by risk percentage divide by stop loss in pips. Okay, which is this suitable for simple and consistent, best for the beginners, don't adapt to volatility. So if you go for fixed percentage, right, it may not suitable with gold, right? Because gold is really volatile. Sometimes I think gold you should go for the second method, which is ATR based method. I think I share you guys how we use or how you're gonna trade with the ATR, average to range. You guys still remember? How you gonna do that? To me, I make it really simple for you guys, which is you go to here. Okay, you go to the trading view indicator, you search for ATR, okay, which is here, which is over here, okay, based on daily time frame. Okay, based on daily time frame, your ATR is six. Oh, this is go. It's about 670 pip, meaning that your ATR average true range based on daily time frame go move about 670 pip. Okay, if you go to H4, meaning you want to trade in H4, go moves about 200 pip. Okay, or you can just look here. Either you want to look here or you want to look here, right? Meaning that if you miss the session, okay, if I'm gonna use my mouse to like to hover over this candle, you look here, okay, you will look here that the average ATR is about 22 21. It's about 22 21 24. So the ATR is about 20 like 20, which is 200 pip ATR in H4 go move, or maybe more than that. It's about yes, about 200 pip. Okay, you can do this, or you can go to the EUR. Same EUR is about in okay daily time frame 50 pip, or you can look here 50 pip. Here you can use a circle. It's about 50 pip. 50 pip. Okay, for the daily time frame for the EURUSD, or you go to H4. It's about 17 pip. It is 17 pip. Yeah. Okay. So they will say that you use a positions size account balance multiplied by risk percentage divided by ATR multiplied by multiplier. What is that? Adapt to, okay, I have the example of these two. Okay, adapt to market volatility, tighter stop in the calm market, wider stop in volatility market, volatile market. Okay, this one is, you can use this for gold. Okay. Okay, for example, for the fixed percentage, for example, you're gonna trade with the EURUSD trade setup, your account balance is 10K. Risk per trade, which is 2%, meaning that this trade you're gonna risk $200. You want to entry at 1.1000. Stop loss, you're gonna put at 50p. Pip value is about $10 per standard lot size. Okay, so equal to, you get $200. Okay, divide by, you take 50 pip time multiply by $10. Okay, divide by 2. Then after that you divide by $20 or $200. Then $200 divide by 500 equal to 0.4 lot. Meaning that this trade you need to trade with 0.4 lot size. Okay. What if you want to risk? I want to use my calculator here. What's about you say, okay, I think risk per trade 2% is 2 liter. What about you say that, okay, I think I'm gonna take 10%. So 10% of the 10K account, that would be 1,000, correct? $1,000. Am I correct? Yeah. It is 1,000. Yeah, $1,000. So you're gonna entry at, you're gonna get 50 pip, right? That would be 50 multiplied by 10. That would be 500. So then you're gonna use 1,000 multiplied by 500. Oof. That would be 2 lot. Meaning that this trade you can go for the 2 lots. If price hit the stop loss, you have lose how many? $1,000. Okay, $1,000 for this fixed percentage. Okay. And another one, ATR best method example. We're gonna use a GPUSD for example as well. Same, right? Account balance 10,000, risk per trade 2%, but actually risk per trade depend on you, right? Sometimes I could be 10. Sometimes I don't go for like 2%. I don't go by percentage. I go by value, meaning that I go by sometimes just like take either $500 or maybe 1K per trade. Okay, and after that you can use ATR, which is the use 14 ATR, which is active pip, which is here, right? This is the ATR, is a 14 period. Okay, so these are 14. Sometimes it depends. Some people will just go for the 10, but I just stick to the default setting, which is 14. The common use is 14. Okay, and then you can see then 14, the ATR for just say H4 is about 17 pip. And then you can take a 17 pip. Okay, multiplier, ATR multiplier, you can go for 1.5 ATR. Okay, but some of you guys will use 1 ATR. So up to you. At least 1-to-1 ATR. You can go 1.5 ATR or you can go for 2 ATR. Meaning ATR, active pip, multiplied by 1.5, which is equal to 120 pip. Okay, or if you're gonna use here 17, you use 17 multiplied by 1.5 or multiplied by 2. Okay, and then you're gonna get the pip. Then you use 200, the same. Okay, and then use 200 divided by 1.2K, so your lot size would be 0.167 lot size. Okay, this is quite straightforward. You guys have any question? By now, you should know how to calculate your lot size, right? If you've been trading more than 1 year, by now you should know how to calculate the lot size. Okay. If you never used ATR before, okay, you should. Because ATR can help you, like ATR can guide you where you're gonna place the stop loss and take profit. Okay, I'm gonna have a quick one to show you guys. Okay, for example, if I want to trade EUR USD based on right now EUR is rising. Okay, if I want to sell at the order block, this OB, if I want to sell at this OB, okay, so I'm gonna put my pending orders sell limit. I'm gonna put the sell limit here. I'm gonna put the sell 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 limit entry. Mhm. The limit entry here, right? And how I'm gonna put the stop take the stop loss. So I'm gonna take my SL. So basically my SL equal to, I'm gonna put 0.00175 minus, okay, minus what? Minus my entry. My entry would be 1.1, no, 1.16487, right? This is the one. We just take the number, copy. Oh, no, my stop loss gonna be plus. So what is the calculator? Okay, plus, correct? 1 by 1 plus 0.00171 equal to, this one gonna be my stop loss. I'm aim for 1 to 1 ATR, okay? This is a 1 ATR. So I'm gonna put my stop loss. Okay, this is gonna be my stop loss. My stop loss, right? And my profit, okay, my profit would be how many? You just take this, this number, the entry, then you plus 0.00171. This is your TP. Your take profit. Okay. Oh, no. You guys did not correct me. Not plus, minus. Uh, okay. Minus 0.00 because we sell 171. Okay. Copy. Okay, this is gonna be my take profit. All right. So after that, if you say, okay, we go for the short, our entry is here, right? This is our stop loss. This is our take profit. Okay, somewhere around here. It's about 1 to 1, risk and reward 1 to 1, 1 ATR. So if you want to go like 2 ATR or 1.5, you just chip this one. And look here, this one gonna be your take profit is 1 to 5. Okay. Or if you want to go for 2 ATR, you just move this one, and this one gonna be your take profit. Let's just say somewhere around here. Okay, if you want to go for 2. Okay, so this is the idea. If you like, you have no idea how, I don't know if I want to put the pending order, where can I put my stop loss, where can I put my take profit, and then to use the ATR. Okay, ATR is really useful. A lot of the trader, they don't know about the ATR, or they don't know how to use it. Okay, they don't know how to use it. So this is the way for you guys to use. Okay, just look here. This one in H4 time frame. Okay, of course, if you trade on daily time frame, the ATR is gonna be different number, meaning that I want to get like actionable within today in H4 time frame. So you see that price is about to rise. Okay, I'm gonna put my limits sell order here, and I will gonna put my stop loss here. Okay, of course, you're gonna put where the recent swing high, and even like this one as well, but here, right? So you say that, okay, I think my ATR is too stop loss is too narrow. You think that, okay, I think I'm gonna maybe go for 1.5 ATR. So meaning that, let's say if your stop loss here, your take profit here, you want to go for 1.5 ATR. Okay, then your stop loss is gonna be somewhere around here. Okay, if you're gonna get 1 to 1, of course your take profit is gonna be have 1 to 1 to get the risk which is a better RR 1 to 1. Okay, and then meaning that if you're gonna adjust here, then your lot size is gonna be smaller, right? If you want to just trade with dollar, for example, if you want to trade, you say, okay, this trade you willing to lose, you okay with 1,000. Okay, so whenever you put a 1,000, maybe that one go for one lot size, right? One lot here, right? With uh with ATR 1 to 1, if you're gonna put here, this is gonna be your one lot size. But if you're gonna adjust your stop loss further, maybe there 1 to 5, your lot size is gonna be smaller because you widen your stop loss. But if you have very tight stop loss here, your lot size could be more than one lot size, meaning that if price rising hit the stop loss, you will lose only $1,000. Okay, so this is how you use the ATR. Okay, anyone confused? Please let me know, guys. Okay, what about gold? You can use with gold as well, right? You can use with gold as well. Let's say, okay, let's say I'm gonna put the pending order for gold today based on the OB. This OB is still valid because price haven't come in the zones. So this is gonna be my pending buy order. Okay, based on this, I'm gonna put, let's just say I may go to H4. Okay, you say if you go to H4, like yesterday, price have been in the OB here at 4189, and then price rising. But you want to look, if I want to wait at the daily time frame, price haven't like go down. Let's say, okay, somehow I want to use the daily time frame. Okay, I'm gonna bet on 50% fib, meaning that I'm gonna put the buy limit. Okay, this is my buy limit. Okay. Buy limit entry. Let's just say at 41.95. Let's just put, I'm gonna round up, just put exact at the 41.95. Okay, exact at 41.95. psychological number, right? Anything that ends with 0 or round number, anything that ending with 5 here. And then I'm gonna pull out my ATR. How many? 670 pip. Okay, so I'm gonna use we go for buy, right? So we go for buy, you're gonna use 4195 plus 67, just round, I'm gonna put 67. That's gonna be 42, 62. This is gonna be my TP. Oh, right. So this is gonna be my take profit. Okay, and then my stop loss, you just use 4195, right? Minus 67, just round 67. That's your stop loss. 4128. This is your stop loss, right? This is your stop loss for today, right? Based on the ATR. Okay, so you can use the go for long and we put the entry here somewhere exact, right? You can see that risk and reward 1 to 1. If you say that I want to go for 1 to 1.5, stop loss, you're gonna be here, but you're gonna say that okay, I think I'm gonna aim for TP at the OB in the lead time frame, which is here, right? This is the OB in D1 or the block, meaning that I want to aim at how many percent? Then I'm gonna use the Fibonacci. Okay, I'm gonna aim for at least if price have break above 127 extension, that's gonna be my profit taking, meaning that within the OB here, okay, I'm gonna aim, that would be risk and reward 1 to 1.5. Okay, which if you could zoom in, remember, I would tell you that within the OB in daily time frame, when you zoom into H4, you will see the bearish, not bearish OB, it's a FVG or fair value gap. Right, so you're gonna aim here, right? You see that? So right now, this is how you put your buy limit entry. Meaning that if price falling, you're gonna buy, you're gonna put a stop loss here. Okay, based on the ATR. Okay, because right now, gold is being sideways. Gold is being sideways. Is it the news today? Right, it is FOMC. Is it today or tomorrow, guys? Okay, not today. Tomorrow. My time zone is tomorrow at 3 a.m. UTC actually tomorrow. Okay, so I think right now they are going just being ranging right now. They might wait for the FOMC. You can look at the daily time frame, right? So the daily time frame, that OB, we can aim for this OB if price falling. Okay, hit my buy limit. First TP, you can aim for the swing high. Okay, and then you say, okay, I'm gonna put this on at my take profit or TP1, and if I want to go for 1 to 1.5, this is gonna be my TP2 within the FVG plus extension if price close above this swing high, which is TP1 here, right? So this is how you do. Okay, you see that if you're gonna put here high chance, okay? I will tell that high chance you're not gonna hit the stop loss because if you're gonna look to the left, okay, if they really not respect this OB, okay, the zone, this gonna be the next buy zone for you. That price gonna come to get in the where bullish OB. This is gonna be your bullish OB. You see that? If price did not respect this, you can have like layer in zone here. Because at this zone, there will be people who waiting to buy. You see that you put the stop loss below this zone, below these zones. Okay, below this zone. You see that? So this is how you use the ATR. Okay? This is how you use the ATR. It's work. ATR is work or the currency. Okay, you can use with the US 30, Nasdaq for Germany 30. Okay, any question, guys? Do you have any question? I pause here for a while. Yeah, no question. All good. All good. Okay. Okay, so finding your break-even edge. Okay, strategy as scalper. Okay, for the scalper or you are doing scalping right now, you cannot measure your success or your strategy by risk and reward. Cannot, because scalping you should just measure by win rate. Okay, meaning that the win rate for the strategy should give you more than 65 or 70%, meaning that that strategy is suitable for the scalping. Okay, and you would hear they say, okay, win rate is more than 50%, it's give you 65%, that's okay. Average win is $100, average loss is $100. Your risk and reward is 1-to-1. That's still okay, right? Give you 1-to-1. For the swing, okay, you'll see that win rate is only 40%, only 40%. But why? You see that average win is $300, average loss is $100, risk and reward is 1-to-1-to-3, right? You will see that you're gonna calculate here. They will see that for the scalper, okay, you're a scalper, you earn about $13 per trade you earn. But for the swing trader, okay, they earn about $60 per trade, even though the win rate only like 40%. But because of risk and reward is more than 1-to-1. Okay. The more better risk and reward, the more the better money you earn in one trade. Okay, so that's why to me, for the scalper strategy, have to give me the win rate at least 70 to 80%. To me, 65 is a bit lower, even though they give me risk and reward 1-to-1. Okay, I prefer to have at least a 75 to 80% if for the scalping strategies. Okay, and for swing, you just ask yourself, you are a scalper or you are a swing trader or you are a day trader. Don't do scalp. I don't do scalping anymore. But even though I still trade on the M15, but I'm look on the higher time frame, which is H4, and then I go to M15 for my entry. Okay. Mm. Yes, okay, your risk management, they will say that do this, okay? This is just an idea, but you know, if you already know how to trade, you know how to control yourself, you can go more than 2% per trade, okay? It's just the idea for you, risk per trade, max 1 to 2% risk per trade, which is, I think nowadays, for the prop firm, okay, they kind of like limit the trader to go for not more than 2% risk per trade. Okay, some of the traders a lot they don't like it because you know they kind of like limit Okay, because some of them they just use the full margin. It's more like gambling. So nowadays the prop firm they kind of like protect their company as well. That's why they come out with the rule risk per trade not more than 2%. If you risk more than 2%, one you have a soft breach, which is you get a warning. The second one, if you still do it, you meaning that you're gonna take back your account. Okay, nowadays they have that. Some prop firm they implement the risk per trade now. Use position sizing formulas I showed you guys just now. Calculate expectancy regularly. Implement the drawdown rules. I use this. So for my currently I'm trade with the prop firm. I'm trade future. Okay. So for my small account, one small account, my daily drawdown I set at $100, $300. That is my small account. For my bigger account, I set my daily drawdown is 1K. Even though, okay, I can lose all my 4.5K per day, but I only limit at 1,000. And this one I can lose 1K per day, but I just limit at $300, my smallest account. So whenever it hits my stop loss, I stop. Then tomorrow I come back again. I need to do that because last time I trade with prop firm, I just use all. Okay, let's say they give me the daily drawdown is like 5K. So I can trade with the 5K, right? I can lose all 5K. No, I cannot lose 5K. I need to lose 4,999. Okay, if I hit 5K, that means I lose my account. I can just go for like $4,900. Okay, but nowadays I just limit pay 2K daily drawdown. Okay, and after that tomorrow I will come back again. Okay, adjust for volatility, keep detailed trade log. So you should have the trading journal. Okay, and then you should review weekly or monthly. Okay, not daily, weekly or monthly, that should be good enough. Okay, what you should not do: risk more to recover losses. I did that before. I martingale. Okay, I martingale. Okay. Ignore stop losses. You should put the stop losses first before you put the TP. Over leverage your account. Trade without a plan. Chase losing trade, which is revenge trading. Skipping map. Basically, this one, right? All of us, 99.99%, we have done that. All this. I also did all this before. Okay, before, but not anymore. But it will take time. Okay, because even though some the trader have been trading more than 3 years, 5 years, okay, certain like point here, they're still doing. They're still doing. Okay, they're still doing. I try not to, not anymore, not anymore, not anymore, not anymore. So these are no. All day I can tell you I'm not doing any more of this. If my setup come, I wait. Like yesterday, markets were like ranging. So yesterday I trade, I just earned a few $100, and then after that I stopped trading because the market was ranging and then I don't want to trade, so I just stopped. So yesterday I just earned a few $100 only yesterday, but I already thankful to the market because at least I earned something. Okay, better than nothing. Okay, so that would be all for today, guys. We still have 15 minutes. Any question before we look at the chart together? Now you can request, okay, if you have any instrument you want me to look for the setup. So this is gonna be my setup, okay, for today at the OB, meaning that I will wait for price. Once I want to wait for price to go in the box, my OB here. Okay, it's still valid, this zone. But the zone is big, right? You see that from the upper one, 4198 or like 4002 to 4170 is about how many pip? 300 pip, more than that. Yeah, almost 300 pip. within the zone. So I'm gonna wait for price to come in the zone and I'm gonna buy. Okay, so but right now it just this is a daily time frame sideways. If I'm gonna draw in H4, I'm gonna tell you it's being ranging, being sideways as well. You see that? You see that, right? You see? Being ranging right now, sideways. Okay. Then I was waiting like if price did not come to this level, okay. If I want to sell, okay, based on H4 time frame, if I want to sell, I want to sell. This is my sell zone at the OB or supply zone here. I'm gonna sell here today at bearish OB. The price would be 42.60, 42 within this, which is just now, right? Just now, I was waiting, and I only draw at the body somewhere here, right? Price did not go in the OB. Price did not go in. Price only went all the way at just now, somewhere around here, 41, which is if I were to draw, if I were to capture the wick here, I might get the entry, right? But if I go to the lower time frame, if I go to the M30, this is gonna be the resistance level, right? This is resistance level. You were to draw the resistance level, you will get the entry here. Okay, and at this resistance level, if you go to the M5, you will see the price action, right? Somewhere here, somewhere here. And just now I was trading M5 over here. Price really went up and falling about 100 pip from this resistance level. Or you will say that, okay, I trade with the FVG, right? The zones. Okay, and that's your confirmation, rejection, and then you hold. And then price all the way, either here you say either demand or OB, right? From the swing. Maybe let's say this is your confirmation, you open at this candle, for example. You see that it's about 100 pip, okay, within M5. And right now they are being ranging right now. Okay. Okay, so I'm gonna give you the key level again. Right now they are being sideways. Okay. The support level, I'm gonna put here for my first support. Okay. I'm gonna highlight the zones. And the resistance, I'm gonna put here, but I'm gonna highlight the OB as well. So I want to see price go in the zones. Okay. The upper box plus minus a few pip. Okay. And then around that zone, within the zones. Okay, right now. And the support level still here. If you go to M15, M15 is being ranging right now, right? You look here, right, for the entire move here. I would say that they kind of like make the lower high, but then they make it equal, kind of equal. Is it equal? Equal low, or they are if they're doing like that. I'm not gonna use, right? I'm not gonna use. I'm gonna use either they do like that once they are doing the, you see that, right? Or they are doing the big zigzag here, or maybe here, or they go here. Okay, and then win, or but now we need to wait at least 3 touches and then you can draw, or they are doing like that. But right now they cannot make a lower low. So okay, in the lower time frame, you can trade based on the either demand in the small time frame, or if you want to buy. Okay, now price is falling. If you want to buy, I think this zone is still valid. Around this level, combined with Fibonacci, about somewhere around here. One 4190 to 4185. So I'm gonna put this equal to Fibonacci retracement is 1.8. Okay, so it's about 50 pip in the zones. 50 pip in the zones. Okay. Now price is falling. You see that they cannot make a higher high, right? They make a lower high. You see this here, right? Then now they make the equal low. So we need to see. We need to wait, right? If you hold your sell entry, you can hold. I think price likely to break this support level, which is at 4,200. If they break, then I'm gonna buy at this zone at 4190 to 4185. Okay. Which is I zoom in. What do you see is a FG also. I'm gonna move up a little bit. There's a FBT or fair gap within this zone. Yeah. So meaning that you're going to buy at this level. Okay. And then the last entry, if not respect, at 4180, which is another 50 pip below. Put the stop loss below this week, or you put below this week. Depend on your lot size, depend on your account. Okay. All right, guys, that should be all for today. Any last question? This is M15 setup. Okay, and we go to the H1, we see that there's a FBG or fair blue gap as well. Okay, so this is quite promising the setup, but again, if you don't follow, don't overtrade. Okay, I could be wrong. All right, guys, that should be all for today. Thank you so much for joining me. I hope to see you guys on Monday. Next Monday, I'm gonna do live trading. Okay, and Wednesday is gonna be me again. So please come enjoy. All right, guys, if you have time. Okay. Okay, guys. Thank you so much. You're welcome. I hope to see you guys again in the next webinar. Bye for now. Take care. Good luck. Bye bye.